coming you live from Kuala Lumpur in here. Another episode of the closing bell for week ending 6th of December 2003. As you can see, last week on the 29th November, we did say something. Look, we were quite spot on what we said last week. If you look at it, I'm back on my notes again. As of 29 November, we were waiting for a breakout confirmation, which is at 1810. As we have said before, there were SOS in the background. That means signs of strength. Yeah, we'll comment to that, Linda. Sign of strength in the background, as you can see, and which is a critical point at that junction. You can see here, there's this chart here, maybe on the top right hand side. Let me just have it here. You know, we have this, no, that's cloth. Let me just show you the CI would be much better here, right? Before we had this big break, we were like Monday in here, yep, the 29. At that point, what we were waiting for the 1810, and actually it did close. Remember when we did our Friday closing bell just before the market closed up about 1810. So that was really the confirmation. A lot of time, the market could not go higher because we remember now we don't have the foreign institution to come in to push it up. So what's going to happen is a local institution is going to push up at the last minute at the lowest volume. Now you can also see that the volume is definitely very diminution. Now this is definitely not a good quality uprise. Uprise quality should be going up on what we call higher volume. So when we go up higher and lower volume, breakdown is always possible. So this is not a good quality. Having said that, market can go higher even up to 1850 before it correct back. Then you can see a lot of volume coming in. So typically that's how market go higher. But as I said before, uh, looking back my notes, we have SOS, and every time when we have a test, okay, we have a test, and if the test is successful, the market will rise. Now remember, we have this unconfirmed uptrust. We were looking for the next 3 bars subsequently, which is I believe this was what Monday. Was that Monday? No, that was Tuesday. We should have a breakdown. It didn't break down. Instead, this was actually, we all know, caused by so-called Tenaga Nasional, which has a new tariff price hike. So that one shot up a bit, almost by 10-12%, and so that's why our market is going higher since then. Okay, can you hear me, Adiba? All right, if you can't hear me, let me know, because can you hear me now? Okay, I'm hearing. Yeah, can you hear me now? Okay, good. Some of you can hear, so just adjust your speaker in there. So that's what we are seeing now, the 1805 resistance. So this is going to go higher. If you read the December 2013 market report, we are saying that this closing for December is going to be good. More update tomorrow when we do our investor club in a meeting. Now that one investor club will not be recorded, as I said before. That was more a follow-up and some sort of a service to our graduate and our main course. And over the years, we extended that invitation to the premium members as such. That's what we get people do ask the premium whether that's recorded or not. I'd like to see you more face to face and interaction to really get to meet you, which is always been my first level of support, as well as education, to be able to see you and speak to you for that matter. Okay, so 1830 last week was 1807, so the market has gone up by 30 points in the short frame of time, about 23 points up. It's going to move quite fast, month of December. 1860 definitely within 20 points, just buying a couple of the big large cap like BAT, JTI, that will move up. And also remember, if you look back, UMW hasn't moved up yet. So UMW were to move up higher, this KLCI will definitely close much higher in here. No doubt, as you can hear, this is still being supported by the local institutional more than anything else. If you're seeing that, let me just go back to the trend here. How far back? Since May, as well as May and June, this market has been supported by local institutions. Now remember, at one point of time, our Malaysian market is very small. So the liquidity in the market has been very good. A lot of the funds have been, I do believe our country is still printing a lot of money. So there is a saying, a lot of foreign funds money, which is deposit in bonds, has been used to shove up this market. How true is that? That yet seems to be known. But you do notice a couple of weeks ago or 2 weeks ago, there was an article on the Malaysia Focus how 4.4 billion companies kept in 6 companies who had a lot of cash. Also, that tells you a lot. It's a lot of Malaysian companies have a lot of money, so this eventually will flow back to the stock market. Now, getting back to the CI that we see in here, so that tells you now the second so-called mid-cap stock as well as a small cap stock tells you a different story. As you can see in here, market is mushrooming down. That doesn't look good. As I said before on the Today Friday Chart Clinic, our visit to Pong Teng Siu, which is the head of research, does tell you that the so-called second liner, the mid cap and small cap stock rally is probably be over. What is remaining is just a year end trying to push this up. Now we all remember a lot of the local fund manager are pushing it up to claim their yearly performance. So this is a lot got to do with the year-end rally, got to do with window dressing. Okay, the typical window dressing. No doubt it will go higher on low volume. Take note of that. On higher volume, low volume. Okay, foreign funds I have showed you. Let me just show you again. Definitely still the blue line here are the daily buying. There have been only one occasion the whole month of November where it just popped up by 14 41 million. That's about it. Since then it's been exceeding the market foreign funds inflow. But on the VSA chart you could see we have an uptrust in here. Now remember, as I said before the other day when I was talking to another CIMB staff, I said that look, the market has turned green on the bullish chart of the VSA chart. So that's